is a step-by-step tutorial on what you need to know to get started with investing in stocks. So the first thing that you need, regardless of your location, is that you need a stockbroker. Stocks in Kenya are traded in the Nairobi Securities Exchange market, but you can't buy the stocks directly. So you need an intermediary. I am not an intermediary because there are registered stockbrokers. And here's a list of the stockbrokers that are listed here in Kenya. You can see that we have banks, we have asset management firms like Jengis Capital, we have banks, like I said, NCBA, we have KCB. So we have different banks. So when you're choosing a stockbroker, it can either be a bank or an asset management firm. So by now you're asking me, Ivy, which stockbroker should I choose? From my experience, I would recommend that you choose your bank to be your stockbroker if they provide that service. For example, if you bank with Equity, whether you are in Kenya or abroad, or if you bank with Coop, or if you bank with I&M, choose them as your stockbroker. Why? Because of the transaction fees that we will talk about later. What I have noticed with asset management firms, not all of them, the ones that I have used, or just stockbrokers, there's some which are not asset management firms like Jengis, Faida Investment Bank, Standard Investment Bank. We also have other stockbrokers that just deal with stock brokerage like AIB, there's this Dyer and Blair. So I'll leave the full list in the link so that you can check them out. But what I noticed is with these types of stockbrokers, not that they are bad, it's just that if you want to top up your account and you want to buy stocks immediately, the best option for you to transfer the money from your account to them is through M-Pesa. And remember, when you're doing a pay bill transfer, you incur charges, which might not be a big deal, but it's a big deal when you are investing in stocks because the profits, let me call them profits, the gains that you make, especially when you're buying or selling your shares, sometimes they're marginal. And the transaction cost that you incur transferring money via your M-Pesa to their pay bill might make a difference. For example, if you want to transfer 2,000 shillings to a pay bill, a bank account, it costs you 20 shillings. The gains that you have made from selling your stocks worth that 20 shillings. Because now think about transferring something like 100,000 Kenyan shillings. Yes, it's instant, but you're going to incur a cost. Why am I going too deep on that? That's just a recommendation that I have in case you're going to transfer, in case you're going to invest huge chunks of money in stocks. All right. You can still go for the asset management firms. They are very nice in terms of customer service. Even if you are abroad, you can still reach out to them and they're going to respond to you. Now, with banks, if you live in diaspora, what you have to do is, assuming that your bank is Equity, so you reach out to them and you tell them, hey, I am interested in your stock brokerage services. What they will do is that they'll give you a form that you have to fill out and they'll give you access to an online platform that will allow you to trade. It's very simple, especially if it's a good bank that has good customer service. They'll help you out with that. So that's what you have to do. Just reach out to your bank and request them to be your stockbrokers. The other thing that you have to note with these stockbrokers, like with bank stockbrokers, one of the requirements is you must have an account with them. So assuming that I bank with I&M, I can't go to Equity and ask them to be my stockbroker. I can't. Okay, for some of them, the ones that I have tried out, the ones that I've seen. So that's why it's recommended that your stockbroker is your bank, because it's even going to be cheaper in terms of transferring money. Think about it this way. Let's assume that you have identified certain stocks that you want to invest in. You want to buy Kenya Airways stocks, and you've noticed an opportunity. The price has gone down, so you want to top up your account very quickly. But the money is in your bank account. Again, you don't want to incur so much transaction costs, right? So you'll just transfer your money from your equity current account to your equity stockbroker account, which is almost free. They charge you 2 shillings. You're going to transfer money from your StanChart current account, because that is where the money is, to the StanChart stockbroker account, which is free because it's within the same bank. You see, you benefit in terms of transaction costs, and you also benefit in terms of the timing of transferring money. I think you get what I mean, right? So go for your own bank or choose one of these stockbrokers. Now, the second thing that you need, the second step, is a CDSC account. Don't worry about this, because during the sign up process, when you're signing up for the first time in one of these stockbrokers platform, they're going to open one for you. They're going to give you access to a platform that allows you to enter your details, like what's your first name, what's your ID, what's your KRA PIN, who's the next of kin, what are your bank details. You're going to fill out that when you are signing up. So that is after you've reached out to your stockbroker. So you don't have to worry about this. You don't have to open it. This is not a CDS account. A CDS account is the one that we use for investing in bonds. This is not the same one. That one, you can open it by yourself. This one, your stockbroker will open it for you during the sign up process. So we are good to go. It's going to take like 3 days for it to be approved. By that, this is what I mean. You choose a stockbroker. Let's say it's AIB DigiTrader or FIDA Investment Bank. You go to their online platform and you sign up. You're like entering those details. Or if it's your bank, they've given you access to an online platform where you fill everything out. Once it's done, for you to successfully start transacting, you can't do it immediately. Like I said, it can take to even 3 days to receive something on your email telling you, hey, Ivy, your CDS account number is, let's say, 516789. That's it. That's it. That's it. So don't worry about this, because they will take care of that. So we are done. We're actually done, because once you have a stockbroker, they've opened a CDS account for you. The next step is to transfer money to their wallet. If it's a pay bill, you'll transfer money to their pay bill. If it's to their bank account, you'll transfer money from your bank account to their bank account. That's it. Once the money reflects in your account, you can then buy and sell the shares that you want to. So the online platform that is going to allow you to buy and sell your shares will look like this. It's an interface that you can easily maneuver, because all you have to do is just click buy or sell. Some stockbrokers have mobile apps. Yes, FIDA has a mobile app, AIB has a mobile app. So several of them have mobile apps. You can just do that with the touch of a button, with the touch of a screen on your phone. But for some, you still have to have an online access. So you have to use their website to do that. You can see the list of current prices. When you click B, B stands for buy, S stands for sell. It's as simple as that. I will do videos on buying and selling, because I noticed that the platform almost looks the same, especially the online one looks the same. So that's it. You buy and sell. You're done. You're done. The last step, which is like a bonus tip, is that you need to know the costs that are associated with investing in stocks. There are several. The first one is dividend tax. If the stock that you're investing in is going to pay you out dividend, and dividend is usually paid out once or twice a year depending on the company. For example, Safaricom pays out dividends twice a year. Equity paid out once a year. East Africa Brewery Limited paid out once a year. So within that period when you're receiving your dividends, 5% has to be taken out. 5%. So if you made, let's say, 4,000 Kenyan shillings as your dividends, 5% of this will be taken out. You're going to remain with 95%. That is in terms of dividends. The good thing is that when you're investing in the Nairobi Stock Exchange market, there is no capital gains tax. This is gains. Normally, this tax is supposed to be there. By that, I mean when you're transferring shares, remember you're buying and selling. So it's like you're transferring an asset. Ownership. You're transferring ownership of an asset. It's supposed to be there, but it's not there for all the companies that are specifically listed in the Nairobi Securities Exchange market, in the stock exchange market. So you're good to go, because in other countries, when you're investing in the stock exchange, you have to pay the capital gains tax. So for Kenya, you are exempt, you get to benefit that. There's also another cost in terms of levies and broker fee. Now, these two fees are incurred every time you buy and sell a stock. Every time you buy and sell a stock. For example, if you're going to buy stocks worth 100,000 Kenyan shillings, when you're just buying, so apart from the 100K, a certain percentage is going to be added on top of that, which can be categorized into broker fee and levies. The levies are for the stock exchange market, the NSE, the CDS account that you have, and the broker fee is associated with your stockbroker. They have to make something. I mean, they're buying the stocks for you. So the price range, the charge play around 1.85% to 2.5%. This is the total of add the levies and add the broker fee. So in this case, for 1.85, you can find that actually the levies are usually fixed. They are fixed for all stockbrokers. It's a fixed percentage. The difference is in terms of the broker fee. Some brokers charge you 2.1%, others charge you 1.85%. But I just like categorizing them into one, just to know that the levies and the broker fee can range between 1.85% and 2.5% in total. Can even be up to 3, but this is the common one. The most common one is 2.1% or 2.15%. That's the most common one. So if you're going to invest, if you're going to buy stocks or sell stocks, so it applies to buying and selling. If you buy Safaricom stocks today worth 100,000 Kenyan shillings, you'll have to add, let's say, 2.1% on top. So you're going to pay 100K plus 2,100. This is buying. If you're going to sell them again tomorrow, you decide to sell, you're going to whatever amount of money that you're going to make plus 2.1%. So it's charged every time you buy and sell your stocks. Just a bonus tip, which I didn't add here, but it's still associated to the third point, is that you have to know the type of investment that you want to be, the type of investor that you want to be. You can be a trader. A trader is someone who buys and sells within a short period of time. You can be the type of person who's like, let me buy Safaricom shares now. I earn a dividend, because the dividend is going to be paid out in March or in April. And after I've bought the shares, I'll sell them again and buy stocks in another company like Stanchart so that I can earn the dividends that are going to be paid out in June. So you are buying, selling. That is your main goal, to be a trader. So we call you a trader, not an investor per se. But I still consider it as an investment. So in such a case, when you're buying and selling, you're going to be making capital gains. Capital gains is when you've bought a share, when it was going for capital gain, when it was going for, let me say, Safaricom. There was a time the Safaricom share was going for 16 shillings. Then you notice that the price has gone up in the stock exchange market. It has gone up to, let's say, it has never been to 26. It has gone up to, let's say, 20 shillings. So you decide to sell your shares because now they're going for 20 shillings. You've made 4 shillings. Or you can be the type of investor who will be like, let me just buy Safaricom shares. Even if the value is 20 shillings, I'm not going to sell these shares. I'm okay with earning dividends every single year. So I don't really care, though I actually care about the price of the stock because it has to show in what direction the company is heading to. My main goal is not to buy and sell, but my main aim is to earn dividends in the long term. So you bought shares 10 years ago, you still own the shares and you see yourself owning the shares. You're comfortable with the dividend payout. So you have to decide what type of investor that you want to be. Do you want to be a trader, or do you want to earn dividends? Or you can even do both. But it's recommendable that when you're starting out, just choose one and just start out with the dividends. You'll figure the rest along the way. Another bonus tip, you might be wondering, which stocks should I buy? When you're looking for a stock to buy and dividends is your main target, like you just want to be earning something as passive income every single year, then make sure that you're going for stocks that pay out dividends, because there are certain stocks in the Nairobi Stock Exchange market that don't pay out dividends. For example, KQ, that is Kenya Airways. Uchumi, I think we know why Uchumi is not paying out dividends. There is another one, TCL, TransCentury Limited. The value of that stock is very low. Price of that stock is low. It's like 1 shilling and something. There was even a time it was going for cents. It doesn't pay out dividends. It doesn't pay out dividends. In the near future, it might. Stocks that pay out dividends, mostly bank stocks. Bank stocks pay out dividends. Stanchart, KCB, Stanbic, Equity, Corp. We also have insurance companies. Yes, we have insurance companies. CIC, Jubilee, they're also there. Sanlam is also there. You can also check them out. They pay out dividends. Then we also have companies that periodically pay out dividends. Well, it wasn't predicted. They were paying out dividends in the beginning, but they got to a certain point where they were not paying out dividends, but they've started paying out dividends. KenGen, KPLC. I've done several videos and I'll be doing more, so check out on those. But at least now you can get started. Remember, if you're in Diaspora, reach out to your bank to be a stockbroker, or you can just go for these other stockbrokers. As long as you can find a way to transfer money to their bank accounts, you're sorted. You can trade while you are abroad. Apart from dividends, the other thing that you have to look out for in a stock is in what industry is it in, and what are your beliefs around that? Because we have investors who cannot invest in BAT because it's a tobacco company. Their beliefs cannot allow them to invest in such a company, in as much as BAT, British America Tobacco, pays out a good dividend. So that's something that you have to look out for. What sector is it in? You might want to invest in the agricultural industry. So here we're talking about Limuru tea, Williamson tea, Kapchorua tea. Or you might want to invest in the telecommunication industry, where we only have Safaricom. It doesn't have any other competitor. Or you can decide to go in the manufacturing industry or in the energy sector. KPLC, KenGen. There are quite a number of stocks that you can select from. So look at the sector. The other thing to look out for is how has the company been performing, and what does the future look like for that industry? What does the future look like for that industry? I've done several videos. This video wasn't analytical because I've done analytical videos. You can check them out. Thank you for watching. See you in the next video.